All right. Well, thanks for having me back. I'm Jared Scharf, President and CEO of Desert Gold Ventures. Yeah, so thanks for having me, and I'll get right in. And Matthias, please feel free to interject if you have any questions along the way.
Sure.
So, Desert Gold Ventures is a West African exploration and development company. Our primary asset at the moment is a 440 square kilometer regional land package located in the Kenyaba window of Western Mali, Eastern Senegal. It is one of the most prolific gold belts on the planet for large multi-million ounce gold deposits. There's a number of operating mines in the belt, and the belt continues to expand. There's a lot of investment going in. In fact, Allied Gold just announced this morning a major transaction with a fund out of Abu Dhabi. I think some $500 million overall is going to be contributed with Allied. So you've got a lot of the major players there. Barrick Gold has their Loulo-Gounkoto mine complex. B2 has their flagship Fekola mine. Allied just to the north of us, and Endeavour Mining's to the southwest with their Sabodala-Massawa. Desert Gold, like I said, we've got a 440 square kilometer regional land package. We're bracketed by tier one mines. There's a lot of exploration and development going on, and it's a belt that, even though it's still has a lot of large deposits, it's still extremely underexplored. And when we get into a little bit of what we're doing on our project, you'll see how evident that is. Management, both on the corporate and technical side, have been operating in West Africa for over 15 years. I myself started working in Western Africa in 2012, came on in 2015 as a CEO of Desert Gold, and we've aggressively expanded the land package. High level, Desert Gold, on this Senegal Mali Shear Zone project, we've got a little over 1 million ounces of inferred and measured and indicated combined resource. The company is about 80% complete on a preliminary economic assessment to go into mining oxide minerals on the property package. And as well, there's just a whole myriad of exploration targets where we can vigorously expand the resource base. A little bit of overview on the corporate. Our main listing is on the Toronto Venture Stock Exchange under the ticker symbol DAU. We are also listed in Frankfurt as well as on the OTCQB in the US. We've got 240 million shares issued and outstanding, non-dilutive, 12 million options going to the directors and the board, and about 48 million warrants, the majority of which are held by insiders and arm's length parties to the company. And you can see a breakdown of the warrant schedule there. Major shareholders, management is obviously a significant shareholder. Merck Investment Fund out of the US, major investor. Grand Peak Capital, asset manager out of Vancouver. Lees Jones Gable, a retail brokerage, also out of the west coast of Canada. Ross Beatty, a household name you may know, chairman of Pan American Silver, one of the founding shareholders of Equinox Gold. He's had an illustrious career in the mining business. Sodanaf International, small investment group, and Lucky Holdings, a company associated with our chairman who owns a significant shareholding in the company, and Elemental Altus Royalties. On the management side of things, myself, I'm the president CEO, largely responsible for consolidating the land package that exists within Desert Gold today. Sonny Janda, our chairman, a private investor, commercial real estate developer, really likes the mining business. Him and his family and associated investment partners own a significant chunk of the company. On the technical side of things, Doug Engdahl, an independent director, chairman and CEO of Axiom Global, brings a good independent technical voice, second opinion to what we're doing on the geological side of things. And then really driving the geological strategy of the company is Don Dudek. He's our lead technical advisor. Had a long career in Western Africa, specifically in the belt we're in with Avian Gold. He was the vice president of exploration until they were purchased by Endeavour in 2012. the transaction was around 400 million. He then went on, moved into the Burkina Faso side, started a company called Savory Gold, which was then bought by Semafo, and Semafo was then bought by Endeavour. So he got a lot of regional specific experience, which is important. Ousmane Sheikh Diallo, structural geologist, spent the majority of his career at Acacia, a subsidiary of Barrick Gold. He is our VP on the ground. He spends over 60% of his time in the field. Fantastic geologist. He's actually in the field right now, and we're very lucky to have him. And between him and Don, they make an excellent team. So a little bit about Western Mali as a district. Mali, we'll see what the latest numbers look like coming out of 2024, but it's either the third or fourth largest gold producing country on the African continent. And the vast majority of that production comes from the Kenyaba window, which sits in the extreme western part of the country on the Senegalese border. And I'll show you that in a bit more detail. And like I mentioned earlier, a lot of big developers and operators have multi-billion-dollar operations, which they're expanding and running as we speak. This is a pretty important picture. It kind of lays out the framework for why Desert Gold is doing what it's doing and why we are where we are. This is essentially a satellite image of the Kenyaba window. If you can see the blue river that sort of starts in your northwest and cuts south, that's the Falémé River. It demarcates the border between Senegal and Mali, with Senegal being on the western side and Mali being on the eastern side. And this belt has two major shear zones that cut through it. The most notable one being the Senegal-Mali shear zone, which I've marked with this gold hue that essentially goes from north to south. And along that shear zone, there are at least six operating mines of significant size, even more deposits, and I'll go through them high level in a second. On the western side, you have the main transcurrent, which starts on the Mali side of the border and then dips west into Senegal. And that's related to Endeavour's Sabodala-Massawa Goro group of mines and to Resolute's Mako mine. That was previously Teranga, and Endeavour acquired them in quite a significant transaction. There's been a lot of M&A in this belt here over the years. So starting from the north, Allied Gold, as I mentioned, they announced a very big funding deal today. They have this property package here with their Sadiola mine. Sadiola still has over 7 million ounces of reserves and resource. Allied's looking to expand the mine, upgrade a lot of the plant and equipment there. And they're also doing a lot of exploration, and I think they're having significant success, finding additional ounces and also finding some oxide zones as well. Yatela was mined out. It's since been shut in. But, all history, past production reserves and resources, you're looking over a 15 million ounce camp here. Further south, you encounter our property package. We border them on their southern border. This is our Senegal-Mali Shear Zone project. Like I said, it's 440 square kilometers. We've got 38 kilometers strike extent, exposure to the Senegal-Mali Shear, another 11 or so kilometers of the main transcurrent. And we've got a whole bunch of interesting ground where these two shear zones converge. And there's a lot of compelling stuff happening geologically that's related to just a whole myriad of gold mineralization. Going further south along the Senegal-Mali Shear, you encounter Barrick's Loulo-Gounkoto mine complex, produced over 700,000 ounces annual production last year. There's so much mine life left. All told, there's well over 15 million ounces of production and reserves in this camp. Further south, you've got B2 Gold's flagship Fekola mine. Combined resources, it's comfortably over 7 million ounces. They're expanding. They're doing a lot of exploration, and they're looking to expand production in this area. And I think they recently had some major breakthroughs on the licensing side of things, which is going to allow them to do that. And finally, in the southern part of the belt, before you dip into the Guinea side of the border, you have Managen's Boto Diaka. group of deposits. It's somewhere between 2 and 3 million ounces combined, not yet into production, but I think Managent's quite keen to get that into production. And then finally, on the main Transcurrent side, you've got Endeavour Mining's group of mines, and Mako's mine as well, and a number of other deposits that are being developed by Endeavour and also by earlier stage explorers like ourselves. That's all told at least a 15 million ounce camp at this point. So the game here really is to have a lot of exposure to these regional shear zones that structurally control these large gold deposits. And that's why, since 2015, I've been consolidating as much ground as I can in this area. And I really think that's the major differentiator of Desert Gold. We have a outsized land position in this belt for such a relatively small company. The only other companies that have blocks similar to this on these features are, multi-million ounce producers. This slide just, dives a little deeper into some of the history of the M&A in the belt in the picture you just looked at, and one or two other, transactions in the southern part of the country. But the major takeaway here is, when junior companies or developers find something interesting and they get closer to that 2 million ounce threshold, they usually don't last very long. And they usually get taken out, and sometimes at a significant premium. And so that slide, I won't go through it in detail, but it's there for your reference if you want to take a look. Okay, this is a plan view of our Senegal Mali Shear Zone project. It's a bit of a technical image, so I'll discuss a few of the points sort of high level. What you're looking is analytical signal magnetics in the background. The yellow and purple dots you see are gold in soil anomalies, with the yellow dots being represented in a range of 50 part per billion gold all the way up to 200. And the purple dots are 200 part per billion going all the way up to 16,000, which I believe is the highest soil sample we got on the property, 16,000 ppb being 16 grams per ton, which is extremely high tenor for a soil sample. The black stars you see are where we have gold zones of various size and development that are being confirmed by drilling. And then in the black and white boxes, we've highlighted some of the material drill intercepts we've encountered along the property, presented in terms of grade over width. And, really what this image is trying to show at a high level is the proliferation of gold in this part of the world. And, if you take a bit of time to look in detail, we have economic intercepts scattered throughout the property. Gorbassi East, 3 grams over 43 meters. Gorbassi West North, 1 gram over 123 meters. And so we have broad zones of lower grade mineralization disseminated in sediments, but we also have higher grade, relatively narrower zones hosted typically in quartz or in intrusive type units. And you can see, for example, this highlight intercept here at Linkakota West, 16 grams over 7 meters. And so a lot of this stuff is open. It's a virtual certainty that we're going to find more, that we're going to make it bigger. And it's just a matter of how much bigger can we make it. And so at, a little over 1.1 million ounces of combined resource, it's a good starting point. And I have I'm optimistic that we can, crack that 2 million ounce mark with more work. In terms of where the 1.1 million ounces of resource come from, you can see the larger black stars on the property package. That's what makes up the resource. In the southern part of the property, there is a bit of a center of gravity that's developing. You can see as the crow flies, maybe 12 kilometers, little over 800,000 ounces of that resource comes in the southern part of the property. And then we have another group of resources here. And, that's probably not a bad way to segue into where we're at with our preliminary economic assessment. So in addition to the exploration initiatives that are taking place, we're also looking at starting mining at oxide minerals in this part of the world. And typically, gold zones have a oxidized cap to them in this part of the world of varying thickness. Sometimes it's only 10 meters, but in some cases on our property, the oxide goes down 100 meters. So in the central part of the property here at Barani East, we're about 80% complete the PEA, where we're looking at mining oxide in a two-phased gravity plant. And so with any luck, we'll have the initial economic findings of the PEA out before the end of Q1. And then as a second phase, we have these two sort of sister deposits here in the southwest part of the property, Gorbasi West, West North. They lie within 600 meters of one another. And these are very wide, sort of broad zones of mineralization, albeit at slightly lower grade. And we're developing a solution here to potentially do mining via heap leach, which is a very low OPEX, CapEx way of capitalizing on these wide gold zones that are lower grade. So the PEA will address the economics of mining at these two zones. And high level, we're looking at something that's going to start, a little over 200,000 ounces of oxide, processing 20 to 30,000 tons per month. And right now, where we're at in the PEA is all the metallurgical work has been done. The majority of the geotechnical work is done. Plant design, process, that's all been done. And really, we're just at the optimization phase of the PEA. And like I said, with any luck, we'll have something for the market before the end of Q1. This is a detailed breakdown of the resource by zone. High level, like I said, some of the biggest deposit areas are Mugia Far South, a zone a little over 400,000 ounces in an area mineralized that's almost 2 kilometers wide east to west by 2.5 kilometers long north to south. And there's a lot of opportunity in that area for expansion. This is a little bit about our let's call it our exploration model in terms of how we evaluate targets when we choose to move targets up the priority list. But essentially, high level, what we're looking for is something big and wide that carries economic grade. We're looking for 100 gram meter plus intervals, and we're looking for something with multiple kilometers of strike extent. And in the Senegal Mali Shear Zone, that's what you need to be looking for, because the regional endowment suggests that that's more than possible in this part of the world. 2025 exploration program. High level, we've got 20,000 meters of drilling planned, another 10,000 meters of contingency. So all told, it's about 30,000 meters. These are drill collar locations. The yellow collars are air core. The orange are reverse circulation, or RC, and the red are diamond. The purple fences are auger. We'll use auger as a way of getting underneath laterite and overburden, where we don't have very good exposure and we can't really see the geology. So hopefully we'll get all or part of this program done this year. And as you can see, we're targeting specifically along certain structures where we have existing zones and where we see obvious opportunity to make things bigger. So high level, the Senegal Mali Shear Zone, one of the, if not the largest contiguous land package of any non-producer in the belt. There's a lot of gold on the property. There's over 30 gold zones discovered to date via drilling. Virtually all of them are open along strike and to depth. To certain degrees. And, we have a high degree of confidence that we're going to be able to make it bigger. In the meantime, with the elevated gold price, we see low-hanging fruit in the oxide to fast-track into mining. And so we're almost finished our PEA, which will address that opportunity as well. And I'm optimistic for a positive outcome. And like I said, we have 20,000 meters of drilling planned this year. Another 10,000 meters of contingency to follow in real time. And we are optimistic to get some, if not all, of that work done this year. And that's kind of it, Matthias, high level.
All right, so back on it, very easy. Sorry for the technical issue we had here. Okay,
No
so
problem.
let's just focus on a few things back here. So you obviously announced the resources a few weeks, months back. This is what we see on the screen here. We saw the update of
Mm-hmm.
the focus. We do know what happened in Mali and so on. Is there any plan of looking outside of Mali, or are you guys just keep on focusing on Mali and have all chips in?
Yeah, great question. So yeah, it's no secret that there was a coup 3 years ago. The current government has come up with a new mining code. It hasn't exactly been well received by the investment community. Um, and there were also a number of disputes by the biggest, let's say, tax disputes by the biggest miners in the country. Um, but I think the opportunity is getting really interesting. If you look systematically, one by one, each one of those cases was resolved amicably. The latest being Barracks, and so the Lulagunkoto mine reopened. And the debate about how much of the economic benefit should go to the miners and the shareholders versus other in-country stakeholders is an ongoing debate, not only in Mali but in other parts of the world. And sure, the companies that with 100% of their exposure in Mali, their valuations have been affected. Um, but the opportunity in West Africa in general is immense, and quite frankly, Desert Gold is always looking at opportunities both inside and outside of Mali. In fact, I'm going back to West Africa for 2 weeks here shortly, to go look at a number of opportunities. And if the right project presents itself, then we will be very interested in that. I think there's it does make sense to potentially geographically diversify the project portfolio, but I would emphasize that reconstructing a land package like this on a structure like this, it would be almost impossible to do today. Impossible. But if we can find something of similar merit and it passed sort of the litmus test geologically, and it's a friendly mining jurisdiction where they want us to be there, then we're definitely taking a serious look.
And on that, if we can expand, is is a it is a very good news that obviously majors company have come in an agreement with the Mali government. Did you have any talks with the Mali government lately? Have they approached you? Is there any channel of communication? And without telling us what those communications are about, what is your feeling towards what they want in the mining sector in a whole? Because you are not producing, very different story than billion-dollar project of of Barrick. So can you expand on that?
Yeah. So we maintain an ongoing regular dialect with both the Department of Geology and Mines and with the Ministry of Mines. They come and visit our property at least once or twice a season to see what we're up to. They are aware that our intention is to go into mining on one of the properties where we have a fully permitted mining license, which is this rectangular block here.
Yeah.
And then the rest of the licenses are held under exploration. So, we've been given the indications to go ahead. We've already actually started some of the pre-stripping. We've already built our perimeter fence around the initial starter pit. So we're doing things and moving things along in the background. Obviously, the PEA being a major catalyst for us from a funding securing perspective. So clearly, the Mali government had, let's say, bigger fish to fry over the last year or two, dealing with the big miners and coming to a settlement with them. But our mining license is governed under not to get too into the weeds about this, but it's governed under the pre-existing mining convention, under the previous mining code from 2012. And so there's been no um, uh, we haven't been told in any way, shape, or form that they want to, retroactively apply the new mining code to our license. So so far so good. We haven't had any issues, except with the bad headlines, creating just bad news out there in the market.
We can all expect the PEA at the end of the first quarter, probably.
What you can
we
what you
already-
can what you can expect regarding the PEA is before the end of the first quarter, we will publish essentially an executive summary of the results. And under the National Instrument 43101, that then triggers the 45-day window for us to actually file the technical report publicly on CDAR. So we will come up with the initial economic summary of the PEA, hopefully before the end of Q1, and then within 45 days we have to file our technical report. That's the timeline.
Perfect. And just one question to clear out: are there any royalties attached to the project?
So this project is comprised of 10 licenses. Some of them are owned, they're all now owned outright by the company. But in a few of the smaller blocks, there are there are royalties with local landowners that we did earn-in deals, these small blocks here. In all cases, we can purchase the royalties up till 1%. However, all of the properties where we have resources, where we're contemplating mining, so this area here where we have resources, 400 and some thousand ounces, 420,000 ounces, 280,000 ounces, there are no royalties on those property package. So by and large, for such a large property package, it's fairly unencumbered by royalty. But there are a couple of small licenses where there is, a 1 or 2% NSR where we can buy back roughly 50% of it.
Perfect. Thank you very much.